Hello and welcome back to the channel. I have an interesting video for you today, and let's start with the main event, the crash of Facebook stock, the biggest in the corporate history. And right away, analysis start downgrading the stock. So let's dive and explore the reason behind the crash. There are the obvious ones, such as TikTok taking more shares in the advertising market, as a big portion of Facebook revenue comes directly from small businesses who advertise their service and products on the platform. There is also Apple, who allow their user to turn off data collection while browsing for goods and services to protect their users' privacy. And regarding that, iPhone users are in a billion scale, and the practice show that when the window warning of the data collection pops up, most of the users choose not to allow for their data to be collected. In a simple way, if a user interested in pet food and browsing for a product, by not allowing his browsing history to be collected, the software that Facebook used to target the user and bombard him with advertisement will no longer be effective. There, the small businesses will not pay Facebook ads, as now they are not as effective as they used to be. These are the obvious ones. The real reason is hiding in the financial of the company which they released lately. So even though the revenue is up 20% year over year, we see that the total cost and expenses are exploding to the upside by a stunning 38%, throwing the bottom line or the net income dwindling by minus 8%. And in the case of our market, where every penny expected is priced in, we saw the aggressive sell-off, which led the stock to drop by a stunning 27% in a single day. And this brings us back to the importance of the value investing which we value in our channel. And we now understand by this example that value investing is still matter. And what Facebook did wrong is that the insane spending and the cash thrown on lobbying led to the stock crash. With that being said, let's start on the market coverage. And here you go. The Dow is down 518.17 points, or a decline by 1.45%. The Nasdaq is down minus 538.73 points, or a losses of 3.74%. The S&P 500 is down 111.94 points, or a decline by 2.44%. Let's take a look at the sector performance. We saw all the sector performance closed in negative territory, so no winners today. Futures, energy is green all over the board with gains for crude oil and crude oil brands, as well as gasoline, heating oil, natural gas and ethanol. Soft, we have gains for coca, cotton, lumber and sugar, with coffee on the flat line and persisting losses in orange juice. For the metal, we see gains for gold, silver, copper, palladium, and losses for platinum. For grains, we have gains for soybean meal, soybean oils, corn, wheat, oats, and rough rice and canola on the flat line. Let's move to the heat map, and as we see, is a bloodbath all over the board. Technology, we have Microsoft down, Apple down, Nvidia down, Intel down. The whole sector is down except of slight gains for IBM International Business Machine. And communication service, we have Google down, and the famous Facebook is down by minus 26.39%. They got it very hard on the chin, bringing down with them all the other indices such as Twitter and Match Group. For consumer cyclical, we see Amazon down, even though that they had a nice pop-up that saved the market after the big Facebook decline and the other indices, and most of it is related to the option market, some kind of entity. They were aggressively buying puts, and thus a big whale entity played against the current, and they went ahead and bought a lot of the stock, driving the stock to pop higher and higher. But even though we see that Amazon is down now 7.81% with their misses on the revenue, but the news that they were jumping on and piling on the stock is that they are rising the prices of the Amazon Prime. Let's carry on. We have losses for Tesla, losses for Home Depot, AbbVie, healthcare drug manufacturer AbbVie, and United Health Group Corporation. They are on the green side. Some inflationary players such as Procter & Gamble on the green side. Other than that, we see that the financial is down, the basic materials are down, industrial are down except of General Electric, which is slightly on the flat line. From this kind of names, it's a good time to choose a value company, a company that can hold in this inflationary environment as we saw here on the board, and can deliver for their investors gains. Let's start with the chart analysis with the SPY. Let's move on to the 30-minute time frame. We saw the day before after the bull flag played to the upside, we saw the gap, and then it crept up higher, and then we see that here is another bear flags playing downward. On the other side, we reached the oversold territory, and on the MACD lines, they still pointing downward. We are trading between the two levels of 455 and 435. We see that the sell-off volume is getting bigger and bigger, and this is indicate that more pain to come to the SPY. We might have small rebounds, but the main theme is persisting with selling all rips. Let's move on to the Qs. Qs, same thing. We have the gap, we have the crap, and then a sell-off on a big volume with the MACD line pointing downwards. We reached oversold territory. We are trading way below our resistance of 369. There we will expect more pain to come to the Qs. The IWM continue its journey downward. We see the MACD line are pointing downwards with red impression on the histogram is persisting now. The bigger volume comes on the sell side. On the sell side, the smaller volume coming on the rip. So basically, the theme of selling the rip is persisting. We still didn't reach an oversold territory, so we'll expect more pain to come to the IWM. Let's take a look at the VIX for hourly time frame. We see the bottoming on the MACD line and the bars of the histogram getting shorter and shorter, as well as we see a picking up volume on the RSI. That means there will be upward moves for the VIX, which respectively announce more downwards on the SPY. Let's take a look at the dollar index, 1 day time frame. the dollar index continue its journey downward. They breached the support of 96 and getting closer to the second support in line, which is 95. This pullback of the dollar was expected as the dollar strengthened a lot against other major currency. This pullback on the dollar index was waited and expected. That's why we see that the euro is shooting higher as well as the Japanese yen. We might see consolidation for a few days around the 95 support. Let's take a look at the gold. The gold, after the big drop, start crawling upward again. Started after the fact the dollar index pulled down, so we'll expect more gains for golds. I'm generally bullish on gold, as we saw all these massive turmoils in the market with higher and higher volatility. The gold kept steady. Let's take a look at individual stock. We'll start with Apple. Apple is trading above the support of 167, and we see that the MACD line did cross and they are pointing upwards with a green impression on the histogram, as well as we see a move upward on the RSI. This indicates this bull flag will play to the upside and more gain for Apple. Tesla, they breached the support of 995. Now they're trading below the support at the level of 891. The red impression on the histogram is getting smaller, but we still don't see a crossing on the MACD. The RSI is crawling slightly upward. Expect Tesla to trade sideways under the resistance of 995. Let's take a look at Facebook. We saw that Facebook was trading sideways ahead of the earning release, and then the big drop on a big volume. But honestly, this move was slightly expected. If we will zoom out to the weekly chart, we see that here from this point here we see a bear flag and a consolidation, and then the bear flag did play to the downside. So it's useful sometime to zoom out and take a look ahead of time to understand the overall movement of the company in terms of technical analysis. Let's take a look at AMC. The apes, they come again, they stampede, try to break the resistance of $20. They didn't even reach the resistance line. The maximum was $18.73, and then again we see buy the dip and sell the rip kind of theme is persisting. The red impression on the MACD is persistence. The red days are way more than the green days, and the main theme is to the downside. Let's take a look at Bitcoin, and here we see that the line on the MACD, they are pointing upwards, and the green bars on the histogram, they are getting a bit shorter. We are in oversold territory on the RSI, but the volume is declining. The buying force is not as much as it should be to push the chart higher. We have here a formation of a bear flag. That means will be some kind of consolidation around the level of 38,000, but the main theme is to the downside. That's all what I have for you today. Thank you for watching, thank you for listening, and we will speak soon. If you find what presented on this channel helpful, like and subscribe to improve the algorithm, and follow me on social media.